whenever I look at algo trading for prop firms, especially with the current landscape of prop firms, I look at it more of you should be trading exactly the same as if you were trading this account for the next 5 years. That should be your outlook. Why? Because what you're losing is just a bit of time, but the probabilities of you getting funded and you passing if you let the algo or really your strategy run over time, it's way higher than if you try to gamble it.
So it's a long time I didn't speak with Alejandro about algo trading and what that means in Canvas life as a algo trader. So good to connect with you again in Hong Kong once again. The sky looks really foggy here in the camera, but actually it's beautiful sky, very clean. So the camera is a bit weird here, but all good. So good to connect with you again. Good to talk to you. I look forward to talk about algos a little bit and kind of what you are in trading right now, or kind of what things you're working on. A bit of the myth of algo trading, some of the things you can actually do with algos. Give us an update on kind of what you're up to and what you've been doing these days.
Yeah, so these days I have been mostly focused on my algo trading. In the past, we started with working with algos and it had been, a big journey. But nowadays it's mostly working and focused on how to improve the performance of the algos that we have already working, and it's mostly optimization and maintenance work, which even though it sounds like it shouldn't be much work, like maintenance work to make the algos work, it comes like in ebbs and flows. So sometimes there is essentially nothing to do except wait for the markets to play out, but there are some times in which there is a lot more intensive work in optimizing the algos. So right now, as we approach the end of the year, that's one of those times in which with more intense reviewing, checking if anything needs to be updated, so that can start strong next year with algos.
There's this thinking of algos that it's either like a lot of work, you gotta always like tweak the settings because they will not work, or either like the opposite side, which is like, you just let it run and put them on all the pairs and all the assets, and then you make a lot of money. Kind of break down the myths of like what it is and what it's not of trading algos.
Yeah, it's a pretty common thing that people will say like, we can see that a lot with students and people that contact us. It's pretty common that people will think like, I can just get an algo and it will trade for me, and if I just get the right algo, the right settings, I can just apply it to like 5, 10 prop firms and I will be perfectly fine. I can just essentially sit back and just let the money come in without me doing anything. And that's one of the things that algo trading, it's not. Yes, there are times in which you are doing that, just sitting back and waiting for the results, seeing how the things go. But at the beginning, you have to really get to know what you are doing, try to understand the strategies and the systems that the algo is running. And then if you're going to program it, well, there's this journey of programming it. But if you're getting something that it's already tested and something that's already proven, you can kind of like shortcut that and go more into the testing, understanding. Because in the end, in order for you to be able to maintain and get the actual results of an algo or any strategy by that measure, you will need to understand what it's doing. If you don't know what it's doing, the first time you have a small drawdown, or when it has, let's say, a couple of months flat, maybe you're not really losing money, but you're like, plus 1%, plus minus 1%, and then plus 2%, minus 2% for 3, 4, 5 months, you are going to be thinking like, is this working anymore? Is it what happened? And if you don't understand what you're trading, that may not, you don't know exactly if it's actually working or not. So you may be throwing away a strategy which is just passing through a normal, when we talk about normal, it's more like statistically normal in terms of numbers, period of underperformance. And right after you let it go, maybe it will continue being good. So that's something that it's pretty common for people that start and they think, it's going to be always working. You have to really understand what's behind the algos before you go there.
We've had both with Algos times where we just launch it, we start trade it like from scratch. Then it kind of underperforms, and we have like really good settings we believe in, but then the algo kind of crashes and loses money. And we both have times where like things run really smooth and we have good returns. Especially this past year has been really good for the Algos. So kind of how do you decide if like it's performing well enough or it should be performing better?
Yeah, that's one of the complicated things to do, because if you don't have a point of reference, you can't really know if something is working or not working. So you really need to have a framework of reference. And the, I will say in quote, easiest way to get a framework of reference is to do backtest and conduct proper testing so that you can have some historical data of, okay, this is how it has performed or how it would have performed in the past with these settings. Then we can expect in the future, maybe not exactly the same thing, but something similar. my rule of thumb is that I expect the future to always be worse than the past whenever I have a back test. And that I take it really, really simple. Let's say that in the past it has made 20% per year. I will set my expectations as maybe I'm expected to be able to gain 10% per year going forward, because always assume that the back test is the best conditions, the best scenario, and the future is uncertain. So managing the expectations that way, it's a good way to be able to understand and set kind of like a parameter bands of, as long as the algo performs within this range, you know it's working well. Now, if it performs better and you get like 20% or 30% like this year, that's great. It performs outside your expectations in a positive way. But if it starts going below the expectations in a negative way, then that's where the risk management comes in, and you have to essentially cut it up. And okay, it's like, okay, it's like if you have an employee and they are performing bad, maybe you're like, okay, you need to be laid off, or you need to go into training and to be able to improve at your work, in which case for the algos will be like you need to reevaluate them and see if there are any tweaks or modifications required to be able to continue to get their performance back.
There's this perception with trading, and especially algos in general. I've seen with our students like ask questions about the algos. There's like, you can have some really good months where you perform a lot. You can have some months where you lose money. People understand that, but they don't understand when kind of the results go sideways for a while. Like when you just have these ups and downs, it's like stable. Basically, you don't get anything, you don't lose anything, but you kind of stay stable with an algo. Is it normal, and how do you kind of get out of that?
Yeah, so that's something that most of the times it's normal. What may not be normal is if that continues for 6 or 8 months. The thing is, you cannot say generally like all algos will have that. It goes more into like statistics, a series of return. If you have an algo or a strategy that it's trading only 2 times per week, then those up, downs, drawdowns, or even sideways times may last months or up to a year, just because the nature of the amount of trades. You have a less number of trades. It takes longer for statistics to play out. It takes longer for the numbers to go up and down, essentially. But if you have something that is trading 3 to 5 times a day, then having a drawdown or a sideways period that lasts 6 months could be pretty significant. It could be pretty long. So again, as you may have heard in the past, if you have watched all of my interviews, I always refer back to my back tests. Even in the back test, we had periods of similar, maybe less, but similar type of conditions in which it was sideways for a while. Then I would say, okay, that's probably normal. But if in the past, let's say in the past 5 years back test or 10 years back test, there was never a period like that, that would be another type of underperformance that I would consider, okay, maybe we need to check something with the algo, check something with the settings, or evaluate the market. Has the market changed from when we started playing these things, or it hasn't? Because in the back tests, the market will have changed, but it's already kind of like known information. In the future, maybe the conditions are that certain market conditions are staying for longer, and those are the market conditions that had the same characteristics, the same sideways months in your back test. In that case, it's still normal. It's just the market has given more of those conditions than the other ones that favor your strategy or your algo.
I think what's tougher with algos, especially like when you look at the market and you trade manually, you can like spot the setup. You can see which ones you would take, which one you might avoid because either the candle doesn't look good or something different. In algos, you kind of have to work on some filters to be able to filter the times where you don't want to trade. Can you tell me kind of how you go about creating filters for these things?
There is one thing that I see many people doing at the beginning when they are trading algos, is that they are trying to look at the trades that the algos are doing and trying to apply their own like discretionary trader filters. And that may or may not work because you may be using a different framework of looking at the markets than how your algos are operating. So you might actually be hindering them by applying a different framework when you're analyzing them. So the best way that I have found is, yes, you have to use market context and market-related filters, but you have to do them in a similar framework that's compatible with the algos or the strategies. So in order to do that, you have first to understand the strategy. If it's a more price action-based strategy or more indicator-based strategy, you need to understand the underlying, the basis, the core of how that works. And then from there, you can try to identify different market regime filters. So if you have a strategy which is really like mostly trading reversals, you would ideally want it to be filtered so that it doesn't take trades in really, really strong trends unless they are, like extremely oversold or overbought. That way, you can get pick some of those top and bottoms. And in my personal case, what I have done is applying market context such as volatility, trend, and market noise, and try to transform them into a parametric indicator that the algo can take then and have some relative valuation of, okay, the market is extremely or medium or low volatile, the market is extremely medium or low noisy or market noise, and let's have a strong trend upwards or downwards, and then with those frameworks make some kind of buckets, like the algo will only trade whenever there is high volatility or low volatility or low market noise, high market noise, and try to capture it into simplified buckets that will make a more kind of generalization of the market context.
Something I've heard a lot is people want to be able to earn while they learn. They want to be able to run in algos or follow signals or take some trades while they learn trading. Do you believe in this? Do you think it's a good idea, or do you think that could actually kind of make the process longer?
I think it depends on how you look at it. If you are looking at it from the point of view of maybe I'm lazy, maybe not lazy, but I don't have time to really learn, I want to just start playing something and applying it and letting it run, it may be okay, but you need to be really careful with what you're actually applying. You need to trust the people behind that algo, the people at the testing, because you're essentially outsourcing that testing and that market knowledge to someone else so that they do it for you, and maybe they give you some settings or they help you with the optimization and you're running that. So it's mostly that would be one scenario. The other scenario would be I have the intention to learn, I want to learn, but maybe at my stage, I am just, baby steps. It will take me 3-6 months before I can get into it more in depth, into backtesting or into maybe making my own algo or modifying a version of my algo based on a framework. In that case, it can be pretty useful because you can start with understanding, the basics of the strategy that the algo is trading. And then the algo is going to be trading by itself. So you can be looking at the trades and then going through the things that already exist in the algo. And, if you are getting an algo from someone like the Algo Nation program, you can ask me hey, this is the market context filter. What does it mean? What is it doing behind the scenes? And you can help understand those parameters, those frameworks, and then you can make you can make your own settings or you can make your own optimization going into that framework. But if you have something that's already working, you can, in essentially have more time or have that confidence that you don't have to immediately start to get all the, putting all day long there working in backtesting. You can do it more in your time and make it your own instead. So I would say it in two different ways. If you just want to be lazy, then yes, it will help you to get something done, but you may not get that level of development as a trader. And if you want to be you want to develop as a trader and you want to get it, it can be useful. Just make sure that the people that, or the algo that you're getting can also teach you other parts, not just essentially just play this algo, put play, and that's all, but also teach around the framework, because the framework is really what you're going to be using as an algo trader to develop yourself and to get your own settings, your own portfolio.
I think one of the big kind of fear of algos for people who know about it a little bit is over-optimization, having something that is too optimized for certain pairs. There's this big equity curve in the past and they think it's going to work in the future, or they know it's going to crash and not work. So how do you avoid over-optimizing? And also people say you shouldn't trade different settings for each pair or each asset. How do you kind of put this together where you have good enough returns, you can really get optimized return, but at the same time not too optimized?
Yeah, so one of the things that you should take care about is whenever you are doing backtesting and optimization, the first thing that matter a lot is data and data quality. Then after that, it's how you do it. So whenever we have members that are telling us we have this optimization, can you check them? Before looking at their results, I ask them, what process did you follow? It's all about the process, because with algo trading and optimization, you can never be 100% sure that it's not over-optimized. You can only reduce the risk by trying to follow the best practices. And that is really reducing the things that you are modifying or optimizing, having a period that it's never seen by that data so that you can validate, hey, it did work here when the algos knew all this data and we're optimizing to this data, but it also works in this part that they have never seen before, so completely different market conditions. Then you can have a validation saying, okay, it worked in this too. Now, there's a smaller chance that it may be that the market was perfect in those, but in the future it's going to be completely different to that. It's a lot smaller chance than if you just put, okay, let me optimize over this whole data, and then you don't have any validation. So it's a multi-step approach in which you have to be taking care of not optimizing too many things at a time, and having validation periods so that you have like the in-sample and out-of-sample data. That's how we call it in the algo business. And then you can go into more complicated, into walk forward, multi-stage walk forward, and other analysis. You can get as complicated as you want, but this is the simple core of one option for optimization.
The sad thing about Algos is kind of not sexy enough compared to like a manual trading where you can like just read the price action, like follow the price, trade like the banks. There's nothing like interesting about Algos necessarily for people. It's either that or they see it as like a easy way to kind of like get the strategy working for them. So there's like a big in between of like either it's too boring or it's like too easy, and then they just want to apply it and go with it.
Yeah, that's true. You can see Algos. Algos can be the sexiest thing if you are not doing anything and you are just letting them run, or it can be the most boring, like high school math teacher boring type thing. Because in the end, many of the things that you are doing in order to maintain, develop, and optimize, analyze your algos, it all goes back to statistics. We always use statistics, numbers, and backtests. So many people don't like math, many people don't like statistics. It's one of the most hated courses in school for most people. So of course it's not going to be sexy for most people. But the good thing about algos nowadays is that you don't have to go all super technical in order to be able to get some benefits. You can take the core and the basics and try to stay to the structure of the process, and you can get 80%, 90% there. Now, if you want to go crazy there, you can go and do a lot more advanced mathematics and statistical analysis, but just following the process can get you most of the way there, up to the point in which you can have something that you can rely on and that you will know how to work with.
The thing is, someone like, if you're not a software developer or like a coder in your profession, it's really hard to get to learn to code. Like the way I've done it before is I will try to kind of learn just in time, like learn things you need to be able to build it. A lot of people ask like, can you teach us how to code the algos? Like that's a lot of stuff you got to teach. Like all the language, the different functions, the whatever. I think it makes more sense to kind of learn what you need to learn to just do it over time as you go. Is it kind of how you do it also? Like you learn things that you need to learn at this point, or do you kind of try to learn everything at once?
Yeah, so how I started with algo trading, before I started with algo trading in specific, I had watched or read a couple of mini courses online of how to program, just the really basics. And then from there, I started with a builder, EA builder. I'm pretty sure you also use at some point some of those free EA builders, either by a broker or those online ones that are completely free. And I started with that. And what really matters the most in almost any of those things, it's the logic, understanding how the logic works. When A does X, then you do Y, and all those things. So the logic blocks really are what build the structure, and then everything else, it's essentially language. So it's like, if you have the logic, you have the structure, and then it's just about speaking the language so that the computer can understand it. So that part can be solved nowadays with programmers. You can get programmers sometimes in Upworks and other places, or you can get some professional to program it to you. And in my work as doing algos for clients, most of the time, the most difficult part for normal traders that are price action or that are more like hands-on, it's trying to transform their framework of looking the markets into logic blocks. And then from there, it's most about writing. So you can get good programmers, even if they are not experts in translating that, as long as you are able to phrase your trading strategy into logical blocks and connective, like logic connections, then almost any programmer will be able to help you. So that's a way in which you can get started yourself. Now, if you want to get into actual coding, there may be some courses. I personally learned I used those builders. Then something didn't work. I opened the code and started looking at the chunks of code and starting to learn, and looking from there, documentation, forums, and back and forth. It was a tedious process at the beginning, but it was mostly through looking at things through the lens of curiosity and how this works. And then understanding already the logic, it was more, okay, so this, does this. And now I know the words that I have to use, or the function names that this program is using, and how the logic goes. And eventually you can build really complicated stuff with that, because most of the things are just essential blocks, one after another, or in a chain of work that do most of the work.
Yeah, it's a good point though. You're right. It's like the logic is important, but then the actual language is like it's kind of like using Google Translate. You can find the way to express what you want to say, and kind of you can find how to write it easily. But it's the logic, the how do you, like when you trade, when you not trade. That's the hard part.
Yeah, exactly. Mostly the core logic is important. And nowadays, that's something that I forgot to mention. You have programming languages which are really easy to get examples or start doing things. If you want to start, I would recommend you to go with TradingView PineScript, because it's a programming language which is really easy to see and to get examples from. You have a huge library of open source code of things that are already working, and then you just look at the code and you're like, okay, modify one thing, oh, this does now, make an indicator, oh, this modifies this, it makes the line different. And you can start working with those logic blocks and essentially copy paste parts of different code from different people into make your own thing, and then later you can evolve to your own stuff. But with the TradingView PineScript, you can prototype and learn easily, and then from there you can get there. Now, disadvantage of TradingView, you cannot really do automated trading like MT4, MT5. So you may need to, after you test your idea, you may get a programmer or you may get someone to help you to translate it. But if you want to get started and you want to be curious, that's a relatively easier way to get started than what I did.
When it comes to getting funded with Algos, how would you go about it? Because you got to, of course, look at the performance. You got to be able to have a strategy that can pass the challenge, at least not do the drawdown, even if you have no time limit. How would you go about creating something like that to pass the profit challenge?
So in the past, it was extremely difficult to optimize or to arrange an algo in order to pass the profit challenges, mostly because of that time limit at the daily loss limit. Because when you're looking at an algo, you're looking at a more bigger picture framework and stats. So those two things were the biggest factor for maybe everything is working well, but in 30 days you didn't get the lock in the market. You didn't get those a good month, but maybe next month you get a good month. So now that those time parts of the time limit is being eliminated, and many prop firms now have their daily maximum limit being really close to the maximum loss that you can have in your account, has made it so that really you should be doing what you will be doing for your own account. And then once you get your optimization or your backtest, at the end, the last step you do is what I call risk modeling, which can be as simple as historically my backtest and my models, let's say my algo at 1% risk per trade, which will be like my unit base, my core base, has had a 15% maximum drawdown in a 6 to 1 year period. I expect that maybe it could take me 6 months to pass the evaluation. So if it's 15%, but the profit money allows me 8%, then what I will do is model. Okay, so as simple as 15% over 8 is so it's basically half. So I will cut my risk between 0.3 to 0.5% risk per trade to be more or less in that area. If I want to be more conservative with my rule of thumbs, I will double my maximum drawdown for long-term trading to be able to think for the next 1 year, 2 years. I'll be cutting that even further to maybe 0.25% risk per trade. But if I want to push my luck a bit, because it's an evaluation, it's a relatively low cost, high reward opportunity because of the fee that you pay for the evaluation is relatively small, then I maybe would put it closer to the 0.5 to try to get faster that part. And now if things start not working that well, then I can reduce a bit my risk. But it's really, you do the same thing and then you just reduce the risk. Now, if your property has some rules around trading news and other things, then you will have to have a bit more work because you will need to build those things. Okay, what's the effect of closing my trades before news or weekends in my algos? You will need to evaluate multiple scenarios. But nowadays, the prop firm scene is a lot easier than it was 5 years ago. You only have to worry about, can I make the profit before I get to the maximum drawdown? Essentially, so it's mostly about risk modeling now.
I think one of the mistake people make is they will think that they because in reality, no one wants to wait 6 months to pass the profit challenge. They want to get it in a week or a day if possible, or a month maximum. So that means that they want to maybe try to build a more aggressive algo first, then kind of go and scale it back to more conservative when they get funded.
Yeah, that's
which is it's like a slippery slope, because then you could have more risk, you lose more challenges, and you get discouraged. But then nothing motivates you when you kind of pass to kind of scale it back down to more conservative.
Yeah, I would say that it's kind of a bit more gambling view of it, because yes, you can maybe get a lot faster, but if you have a bad week or a bad 2 weeks, then you could lose the evaluation account pretty quickly. So whenever I look at algo trading for prop firms, especially with the current landscape of prop firms, I look at it more of you should be trading exactly the same as if you were trading this account for the next 5 years. That should be your outlook. Why? Because what you're losing is just a bit of time, but the probabilities of you getting funded and you passing if you let the algo or religious strategy run over time, it's way higher than if you try to gamble it. Now, if you understand that maybe you have, maybe you want to have it in the next 1 or 2 months and you understand that you will be more likely to fail, yes, you can do it, but it's more like up to you. If you want to essentially like gamble on a bit, and in that you're going to have 1 or 2 good months and increase the risk per trade, you can, but again, what word I use? Gambling. You will be gambling that it's working. You wouldn't be playing the long-term statistics and probabilities of your algo, which it's ideally what you want to do if you want to stay in this business, for the next 5 to 10 years.
How do you know when it's time to change your settings, especially in the prop firm setting where you don't want to necessarily go to max drawdown before you change settings? Do you kind of be proactive about it, or do you just wait till you hit the drawdown?
Yeah, it's a really important part. So if things are working well, you don't do anything, but what happens when it's not working well? The first thing I will look at is, as we mentioned before, some like risk bands. So if it is within these parameters, and what I do for prop firm evaluations is I model it so that I still have some space. Like let's say that things are not going well, I will have some preventive steps of reviewing, analyzing, and before I hit 60% of that band that I have set, I will start looking for either optimizations or new settings. I will start already looking for, if it gets higher, gets to the 80%, I need to be ready to change it. Because yes, you don't want to get all the way there. And also, you want the new settings to have some room, because nothing guarantees you that once you start changing settings, it's going to go immediately to profit. They could still have a small drawdown before they actually start playing in the market. So you will want to have some space. So I had the bands, and that's why I use my rule of thumb of doubling the risk when I model. That way I have some extra space, even if they touch my maximum limits in terms of the risk bands.
This is the way of doing it as a risk manager and not as a gambler, so definitely makes a lot of sense there. So that's good, very interesting. I know not everyone wants to do it, of course. It's like sexier to just go and go all in, whatever. But definitely a good way to do it in that case, for sure.
Yeah, what you can see with normal trends of the people, most people prefer scalping, day trading, and less people prefer swing trading and longer term trading. It's pretty similar with the algos. You take a step back, even if your algo is a scalping algo or day trading algo, you take a step back and you become more of a role of a manager, and then you will start getting some of that risk management perspective. So you really step out from being the trader to being the owner of your trading business and managing your employee, which is your algo. So it gives you a bit wider view, but for more people, that like more extended outside view is not as sexy as being in there. It's not as sexy as like being in the football field, playing and doing all, giving your all. That being like the football coach just in the sidelines, talking to the players. You can see it in that way. It's pretty similar. So.
It's fun to be traveling, to be doing something else and trading, and to still earn money on the side, like to still have returns, to not even care about the return, but they just run. You don't have to look at your performance every day or every week necessarily, but just to have it there. It takes trade 24/7 or 24/5, and you can be doing stuff that you care about, either whether it's like business or something you care about, or just traveling and having fun. It's a good thing. If you want to go and have fun, if you want to go gamble and play straight, go to casino. Go to Macau to meet him.
Yeah, that's
but
a good point.
If you want to kind of live your lifestyle and do other stuff, then Algos is a good place for that.
Yeah, that's a good point. I didn't mention it, but Algos allows me to not do anything if I want one day, or I can just go out to the park or go to any place, and I can still trade, and then I can organize those, as I mentioned at the beginning, those ebbs and flows of the work, and I can just work for a week intensively or a couple of weeks, and then essentially have 2 weeks, 3 weeks in a row in which I don't have to do anything for the algos. I just need to check, make sure the VPS is running, the MT4, MT5s are running, nothing has crashed, and just do whatever I want. I can go to the beach, I can go to the casinos to gamble there instead of in the markets.
Some of my best weeks with algos happen when I either had a cold, like a flu or something, and those are usually the best weeks. For some reason it happens. I don't wish to have more flus and colds, but it's a good way to do it. So
Yeah.
it works well.
I also remember one time when I went to course in Europe, and I was a bit worried about the algos because I had set them up, but I was used to constantly monitoring them. And that year, my best month was that month in which I was 2 weeks in Europe with the algos, and I only checked them once, one day at night, just to make sure the VPS had restarted properly and everything was running. I didn't really care. I didn't look until I returned back, and it was like, oh yeah, it's a really great month. And what did I do the whole month? I was half of the month cruising in Europe, and the profits were coming in without having to worry about it.
That's good stuff. Awesome. So people are going to ask where they can get these Algos. You want to tell them more details about where they can find it and how they can work with us?
Yeah, so we decided to trade. We have made some algos as part of the Algo Nation project, and it's essentially the strategies that Etienne has been trading manually, and also our second coach, Michael Thomas, have been trading manually, and they've been passed through a filter of an algo trader, trying to marry that part of strategies that are proven with the automation of algo trading. And yeah, so they can check more about the program in the Algo Nation page. We're going to have a link in the description below. And yeah, you can join the program. And one thing that I wanted to do with this program is not just have that part that I mentioned at the beginning of you just get the algos and you just run them and that's all. Yes, you can do that if you want, but really my goal is if you go there, you should be able to make your own settings if that's what you want, and from there grow as an algo trader. So we have also content around how to optimize, how to do the things, and you have me as your guide to be able to either help you make your own algos or get what we made and make it into your own version.
Yeah, good point. I love to share this with people because they will turn this ring around. We have people got fun with them and are staying funded with these algos. Some people are trading them full time and kind of focusing on the algos only, which is kind of cool to see. So definitely you can go your own way where you can copy your stuff, copy the portfolio we trade, or you can go your own way and develop your own portfolio. Both ways work. The important here is that you apply your stuff, and when you do it, then things kind of work out really well.
Yeah.
So thank you for your time here. It's good to catch up with you. Good to talk again in Hong Kong, and look forward to see how we can make this algo better in the future. We are always trying to work on them, improve them a little bit, kind of make them more user-friendly sometimes for people, and it's kind of good to discuss that sometimes. So I appreciate it, and hopefully people can start to work with us, and we hopefully see you on the other side.